Welcome, dear traders. The Japanese stock market rose sharply today, extending its winning streak. Australian stock indexes also went up, amid signs of optimism on Wall Street yesterday. The US stock futures remained almost unchanged in the Asian session, after a two-day rise of the main indexes. Investors are paying great attention to the midterm election results. So far, Republicans have got more votes. If they win the majority of the seats, it will be a hard blow to Joe Biden's plans on inflation, tax increases, or budget spending. Given soaring inflation and the strong labor market, analysts are trying to assess the risk of a recession in the country. For example, Goldman Sachs sees a 35% chance of a recession in the next 12 months. So, the main question of the midterm election is whether Republicans will be able to influence the US Congress and somewhat change the stance of a monetary policy. Apart from that, market participants are curious about when the Fed could start to slow down the pace of aggressive tightening. Prior to the release of the non-farm payrolls report last week, stocks were growing, whereas the US dollar was falling on expectations of less sharp rate hikes. However, such hopes quickly faded after Jerome Powell's speech at the press conference. However, four Fed policymakers pointed out that they could consider a smaller rate increase at the next meeting. For this reason, the regulator is projected to hike the key rate by 50 or 75 basis points at the December meeting. Yet, the speculators should remember former U.S. Treasury Secretary Larry Summers' warning. There is a long way to go before prices stabilize. If the Fed starts easing policy too early, inflation will return and it will be harder to cope with it. He repeatedly compared interest rates with the course of antibiotics. He deemed premature pauses in the rate hikes to be a direct path to even more persistent inflation. It appears Jerome Powell shares the same point of view. It means that the Fed will hardly change its hawkish stance. In anticipation of the results of the midterm election to the House of Representatives and the Senate, the US dollar looks rather weak. In the Asian session, it was trading above the psychologically important support level of $110. It was fluctuating in a narrow range of 110.05 and 110.55. After a two-day decline, the US dollar index settled at 110.40 versus its main rivals. The US dollar and the US Treasuries are likely to pick up steam amid expectations of a sharp rate hike at the December meeting. Yet, before the release of the crucial economic reports and the election results, the US currency will remain trapped in the sideways channel, trading with moderate gains. The dollar-yen pair is also moving in the sideways range of 146.28 and 146.96. The pair may decline sharply amid the likelihood of a new intervention by the Japanese authorities. A similar intervention occurred, for example, on October 21, when the yen was trading about the 150 level, so the risk of a new intervention keeps bears at the bay. The pair is trading at the level of 147.70. Nevertheless, the pair is highly likely to depreciate once again due to the Bank of Japan's ultra-loose stance. Although the country's gold and foreign exchange reserves decreased in October to $1.19 trillion from $1.24 trillion, about a tenth of these reserves can be used for currency interventions. They are stored in foreign banks. Japan still has enough currency reserves to conduct interventions. The trajectory of the Australian dollar looks like a roller coaster today. In the Asian session, the AUD-USD pair was mainly moving in the downward range of 0.6445 and 0.6492. The Aussie retreated amid expectations of a US inflation data and an increase in the US dollar. Not long ago, the Reserve Bank of Australia raised the interest rate by 25 basis points. Fresh market stats revealed a drop in business confidence and consumer demand. China, with its strict COVID policy, is also a bearish factor for the Aussie. So there are no positive fundamental factors for the Australian dollar. Therefore, the pace is trading in the downward price corridor of 0.6465. And that's all for now. Subscribe to our channel and keep your finger on the pulse. See you soon.